Let's talk about experience. How much of it do you really have? How much of it did you have when you first started your journey into learning how to day trade the correct way? And still to this day, there are lots of people out there that believe or think they know how to trade the right way. In reality, they do not, okay? So we're going to talk about experience in this video here, because when I first started off, guess what, guys? I had very little. I did not know much about the markets. So sit back, watch the intro. We're going to go ahead and jump right into the video. I'm going to discuss some things that, you know, as beginner traders especially, that you need to really focus in on if you really truly want to make it in this business and become a successful trader. Let me give you guys a good piece of advice. I know we all start watching tons of videos on YouTube or scour the internet trying to find the holy grail to what's going to allow us to become profitable and successful in trading overnight. Because some of us, you know, feel as if because we have the capital or the money, that's the answer to everything in life. It's not, guys. It's about being intuitive. It's about taking logical trades, things that make sense based upon being able to read the market the correct way. I've said this time and time again, we as retail traders do not drive the market. It is the bigger players, the banks, the institutions, all right? We want to move in the direction with them, and there's only one way to do that, and that is to understand market structure. Now, I haven't really been hitting hard at that, you know, beating it to death like I had in the past in lots of videos, but you guys already know. I talk about it so much in my videos about market structure and how important it is, because if you do not understand it, you are going to fail. Yes, I will say that again. You are not going to succeed in trading if you clearly do not understand market structure. It is the number one thing that you need to master in order for you to be able to read the market correctly, okay? All right? And your charts, okay? The charts don't lie, okay? You ever heard the saying, numbers don't lie? And it's the same thing as when we look at our charts. We turn to look at what's going on, the activity that takes place within the market. Now, there are tons of traders out there, and each and every one of us may have a different means or style of trading, meaning a strategy that we trade with, or our trading plans may deviate or vary from one person to the next, okay? Here on my channel, I like to kind of show my style of trading and how I do it, my strategy. I don't have anything to hide, okay? I'm not out here trying to pull the wool over anyone's eyes. I'm just trying to be as honest and upfront as possible to let you guys know and show you simply the way that I trade in my own life, sitting at my desk and in the comfort of my own home, all right? It's a beautiful thing to be able to become a full-time trader and you know, engage in the markets, okay? Day trade no matter where you at across the globe. Now, we all have to start, and we do at some point along our journey, okay? Whether the seed was planted in your mind about trading. And most of us, when we think about trading, what do we think about? We think about stocks. But there's so many other markets to trade, okay? We all know that. You have the options, the Forex, the futures. You know, there's so many other things out there that I guess we can leverage our money in or invest in. But for me, futures is where it's at. I love it, you know. Now, I'm not out here to tell anyone to specifically trade the futures. You have to pick your choice of poison, like I said before, okay? But for me, this is where it's at. All right, so I talked about market structure, right? And how important it is, okay? If you're someone that's getting into this business or the game of wanting to become a day trader, and it's something you're passionate about, you're true to your heart about doing so, whether it's a part-time or a full-time venture that you know ready to start, I would highly recommend do not clutter your mind with a bunch of video, because simply speaking, there is a lot of fake stuff out there, a lot of scam stuff out there, and you have to be very careful. All right, and the worst thing I want to see people do is spend hundreds of thousands of dollars thinking that some particular individual or entity has the answer that's going to allow you to become successful and profitable overnight. You know, lots of ads out there that push you can become a successful trader if you just follow this. You see it all over YouTube, okay? All these this video content or these ads that pop up where people are paying for ad placement. You know, they want you to buy into something. Now, I'm not saying that, you know, in life we're gonna have to pay a price for true or pure educational stuff, okay? It's like going to college, you know, we have to pay for that education, right? And there are successful, very successful traders out there, like myself, that are, now I don't claim to be a pro, you know, I just claim to be just like anyone else out there that, you know, sought out a path and was passionate about it. And now it has led me to what I love to do. Okay. I'm not going to say I'm a professional trader because I don't want to give myself that title. All right. I'm just saying I know what I'm doing. Okay, guys. And I love what I do. All right. And there are lots of individuals on our Discord community. Yes, if you're interested in joining the Discord, find the link to it down in the description portion of this video. Now, getting back to what I was saying, we have a community filled of like-minded traders that have picked up on the strategy and how I trade, and they've become successful in doing so. Not to toot my horn, I'm just saying if you have a question to say, you know, how has the information on this channel, what Mike is presenting and sharing, is it valuable? Has it helped you out? And I'll let them speak for themselves, okay? You can come over to the Discord and ask, all right? That's the purpose. We are future traders and we have nothing to hide. So sharing is caring, if you want to call it that, okay? But it's pretty much, in my mind and what I'm presenting, it's a each one teach one, you know, philosophy in a sense, okay? So I'm not a teacher, I'm not a mentor. I'm just here to share with what I know, and lots of people want to say that, you know, you're a great mentor, you're a great teacher. I'm just here to share, guys, okay? Because I want to see people succeed. Now, getting back to what I was saying, if you do not have any experience at all, okay, you need to start from somewhere. And as I was stated earlier, the single most important thing that you need to understand is market structure. It will be the turning point and the key to your success, all right? You know, this is before you start building a trading plan or developing a strategy to use or using someone else's strategy, you need to understand how the market moves and who moves the market. And again, I'm going to tell you that that's the banks and the institutions. So even myself, when I first started off, you know, I had little bit of experience, all right? Didn't know much about trading, and I really didn't even know much about or know anything about which market I wanted to actually start looking at. And so when I figured that out, you know, with the help of someone that kind of introduced me to trading, and particularly it was a family member, and I appreciate them for doing so, because I love doing this, guys. I really do. You know, it gives me an opportunity to be able to do it, like I said, no matter where I'm at, but primarily in the presence of my home, okay? But let's talk about, and I want to show you today, if you're someone out there that's struggling, please heed to what I'm saying. Market structure is going to be the key that's going to unlock that door so you can get started and be able to read what's going on in the market, because you don't want to be blindsided. You do not want to be looking at these charts and not understanding, you know, understanding what's going on, simply put, okay? So I'm just going to show you a picture representation here. I've kind of showed this in the past, all right, of how the market moves, and start thinking in terms of this, because the market can only do two things, right? Well, let's say three. It can move up, down, or sideways, okay? But in most times, you know, it's making higher highs, higher lows, or lower lows and lower highs, okay? And yes, market structure can be a little bit more complicated than what you just see here, because the market could be what I like to call a wedge, and it can be making higher highs and higher lows, and it's still not broken a high or a low within that wedge. So you have to be able to really focus and understand, you know, the whole movement, the whole structure of the market, okay? And that sometimes takes for you to actually look a day back or 2 days back, you know, just kind of scroll back on your charts. But let me show you, if you're someone out there that is actually struggling today, don't know where to start, need some type of push to give you an edge in what to look for, all right? I'm going to show you not the breakdown of my strategy, but talk about, you know, what's so impactful and powerful about supply and demand trading? Now, you don't have to trade supply and demand. I'm just going to show you that what I look at when it comes to in terms of market structure and how it has transformed my trading, you know, from where I was many years ago to today being able to look at the market the correct way. All right. So let's go ahead and jump into this right now. So just picture this. These are candles, okay? But I'm using arrows, okay? But this would be a high. This would be a low off a swing to push higher. We have another high. A low, which is now a higher low, to push higher, to make a higher high. So this move right here is price moving in one direction, solid direction to the upside, okay? So we're making higher highs and higher lows. So any trader, in terms of looking at this, even if it was on a candlestick chart, will be thinking that the market is bullish, correct? Now this is off a 60 range chart, guys. Well, just zero out that because it's not really, we're not looking at the candlesticks. I'm just using a blank canvas here to show you above price where my candles are below on my chart. But I wanted to draw this out so you can see this, because sometimes people have to visually be able to break things down in their mind and see it with their own eyes before they can move over and you know, like bring the chart itself, the candlesticks into the fold. Okay, so higher highs and higher lows. Me as a demand trader, a demand and supply trader, or supply and demand, I look for price making aggressive moves in either up or down. Meaning it's got to be pushing hard to the upside or pushing hard to the downside. That strategy and how I trade it primarily works when the market is trending, but you can still trade it when the market is consolidating or moving sideways, which I do not recommend if you are a beginner trader, someone with little to no experience. All right, so what I'm looking for is a movement in the market to the upside, a break of structure, okay, which means that price made a high, pull back, made a low, and now it's breaking a swing to the upside aggressively with a lot of force. Taking out structure here, okay, to the upside. Now, if we're moving to the upside, I'm looking for pullbacks to key areas of demand. Now, when we saw this move to the upside here, price didn't pull back to a key area, say for instance, of demand. Demand is going to be the area and where aggressive buying takes place there, okay? And sometimes you may have what I like to call internal structure or intermediate swings within a larger swing here that broke structure to the upside. That could be the area of demand. But primarily what I'm looking for, what I like to see, is price to pull back to the original or the initiation area where the move to the upside with force started from. And typically it's going to be tucked back at the lower portion or lower end of a swing. So we have price breaking structure to the upside. All right. And that's why you see this box right here, this rectangle box drawn, because that's going to be the key area where, you know, primarily if this was the initiation or the original move where price started pushing hard to the upside, then I'm going to be focusing back here. And also you got to think in terms of, you know, you want to buy at discounted prices versus buying when price is at a premium, okay? So that's called buying the lows and selling the highs. So I rather buy the lows down here where the move started at, the breaker structure to the upside, which would be my key area of demand right here, because you got to think about in terms of how the banks and institutions are moving. What are they looking for? If they made an aggressive move starting here to the upside, then they're going to want to come back and you know, retrace and start filling the remaining part of their orders that didn't get filled over here when there was aggressive force to the upside that broke structure. When price comes back to that area right here, they're going to want to start filling the rest of their orders there. And that's where we as retail traders want to be on the bandwagon, join the train with them to take the ride back up to the upside. So you have to be able to see that, okay? And I talk about it in many videos. I'm going to say this now. It's a little bit more advanced than for most beginner traders to really understand. But imbalances, I like to call them gaps, they are a crucial part to actually trading. And you have to be able to see them with your eye when you're trading, because the market is going to fill every one of those imbalanced areas, okay? And if you don't know about imbalances, please do your homework. Please watch some of the videos here on the channel. But the market has to fill those areas. I'm not saying immediately, but some points it's got to fill those areas in, okay? All right, because primarily you're going to have remaining orders resting right there that need to be executed or filled, and the banks will fill those orders, okay? If they've got it on their books, they've got to fill it. All right, so the market makes a move to the upside here, pulls back, break structure again to the upside, okay? So we got a big swing to the upside, aggressive force coming out to the upside. This would be the area. Why would I want to buy in the middle part of a push to the upside with this aggressive force, like right here? I want to buy and have interest in back at an area where price started moving higher, okay? Where the prices are cheaper in this area. Think like the banks, discounted prices if I'm buying, okay? If I'm selling, I'm looking for premium, where prices at a premium in this area here, okay? All right, so price moves to the upside, break structure, okay? Now, there could be, I marked off this area here as if it was an actual area of demand. Now, sometimes price will come down to this area right here, and especially if there's not any imbalance, resting in the origination point, the initiation point, where price started the move to the upside with aggressive force, then price could just clear right past that area, okay? And this could be an area too to where there may be some liquidity resting at. And price says, all right, I've already approached and topped out and took out buy side liquidity. So now it wants to aim towards sell side liquidity. Price is always trying to, in the market, when I say the market, I mean the institutions and banks and how they are driving the market. Look, they're always doing just primarily two things, okay? It's either stopping sellers out or stopping buyers out. But think of it in terms of they're either reaching for liquidity on the top end or reaching for liquidity on the back end, on the bottom end, testing sell stops. Okay, so if there was liquidity here, which is primarily when you have equal lows here, they're going to run that area there. And they say so when you see price stack like this right here, where it's making making higher highs and higher lows to the upside. And this may be an area of structure that was broken. And this could be a key area of demand, okay? But there's liquidity resting right here, okay? If they've got finished running buy stops to the upside, stopping sellers out, then they're aiming for a sell side liquidity, okay? Guess what? And they see it right here. They may want to blow past this area, okay, and start filling in some imbalances to the downside, all right? And then there's another area right here where there's demand that happened because you have a break of structure. So be mindful of those areas there. You know, just because this could be a great area of demand, below it could be another great area of demand. So they may not always stop at the first retracement back. They may break through it and come back down to this area here. So please understand that. Okay, so we talked about the market being bullish, looking for pullbacks to key areas of demand. Okay, this is following market structure. Now let's say the tide turns and the market starts to do something opposite. It starts to shift, change in the opposite direction. Okay, to where we switch from a bullish mindset to maybe a bearish, mindset. Okay, so the market makes a low here, it makes a high here, it makes this low, pulls back, makes a lower high, right? Pushes below and breaks structure right here to the downside, right? Now, yes, I would be thinking, okay, now the market is breaking structure to the downside. So you would start to think about taking short opportunities, right? Okay, yes, that is absolutely true. But you have to be mindful of, like I said, this area of demand down here that rests below this area of structure here, because price could bounce right here. And sometimes what I like to see, even though price may push lower and break through an area of structure, all right, I mean, we made a low here, a lower high, but it hasn't taken out the structure yet. Then it pushes lower, okay? So we got the first leg down to the downside that cleared this area of structure right here. I may not immediately start thinking that, okay, the market is bearish, all right? Especially if I'm looking at, a lower time frame, not my highest time frame, okay? And what I typically like to see, if I'm going to have more of a bearish mindset on a lower time frame, is for the first break to the downside where price takes out structure. And then the market kind of make a setup for another lower high and a lower low. So I'll show you that. So let's say the market broke structure right here, right? Okay, with this push to the downside. Then it pulls back and then pushes lower. Now I got a low, lower high, a lower low, a lower high, and another swinging to the downside with a new low. Now on the lower time frame, my mindset is more bearish, okay? That first initial push to the downside where I get a break of structure off of a lower time frame chart doesn't immediately start causing me to start thinking that the market is bearish on a lower time frame, okay? I like to see, again, at the price break structure, a followed up new low, followed up with a new lower high, followed up with a new low. So basically another swing to the downside, okay? So think about that as well when you see the market turn and starts to shift to the downside. breaking structure to the downside, but also, making it swings as it's breaking structure to the downside. So I like to see price take out an area structure and then at the same time make a new swing to the downside, okay? So just keep that in thought, is what I'm trying to say. So I'm considering this possibly my 12 range chart. That's primarily my entry chart. And maybe this is a 5-minute chart for you time-based traders out there. Again, I say this all the time. I'm not saying the 12 range chart is in comparison or comparable to the 5-minute chart. I'm just saying maybe you are a time-based chart trader and you use a 5-minute chart as your executionable charts. So again, just because I got that break below the first area of structure here does not, allow me to start thinking immediately that we are bearish, because I know right below here we have another demand zone resting below where price could bounce at. So that's how the market moves, and that's how they try to really spook you out, fake you out in a sense. So be mindful of these type setups. So price comes back to this demand zone right here, right below this one here, okay? We look for something to happen, okay? If there's an imbalance back at the zone, then I'm definitely interested in, and that's a high probability setup for me, okay? I'm gonna say this, if you're a first time viewer, if you see an imbalance resting back at a key area of demand or supply, that's what's going to make it a high probability zone or setup, okay? For me, if there's not an imbalance or gap, then I treat it as a low probability setup. And sometimes price will reject at a low probability area or zone, supply or demand. All right, so we get this right here. We get down here to this area of demand, we get the rejection, and then this right here, this break of structure to the downside, okay? There could be equal highs or buy stops resting right here. And if price rejects this area right here at this demand zone, at this high probability setup area, then I'm going to be interested in taking price where? Back up to this area here to run the highs, because the institutions, like I said earlier, are interested in filling areas or taking out areas of liquidity. These could be buy stops right here, okay? You may be asking yourself, well, buy stops, what do you mean? Sellers who engaged in the market right here, okay, that stepped in and start selling the market, okay? What happened is, as they were selling right here and the market pulls back, okay? Let's say this was a run back to the upside here. Well, this could be the bank's institutions trying to stop traders out back to the upside as well. So they were moving their stops lower, lower, and lower, okay? Creating areas of buy stops right here, okay? So when we have the market pulling back right here and it starts making equal highs here or similar highs, then you got an area of liquidity that's being formed or built. So we get a rejection down here off the area of demand. I'm going to aim for that area of liquidity because I want to be on the train, on the bandwagon with the banks to move back up to the area of liquidity and take it out. And look what happens. It moves back up. Now, yes, this is a picture representation, but this is what the type of activity you'll see day in and day out on your charts. So just look for things like that. Take this model right here, screenshot it. Take a photographic image of it, however you want to do it, and just see how it applies to the actual chart itself. Go down to the candlesticks, go down to your charts, and start to see. But I will say this: if you are a beginner trader, please trade in the direction of the higher time frame. Please do yourself that favor. If the market is bullish, then look for setups where price could pull back if you choose to trade supply and demand. If we're bullish on the higher time frame, look for high probability setups. Again, what makes it high probability? Key area of demand, okay, where price started moving with aggressive force with the imbalance or gap. Look for that, okay? So when price comes back to that key area of demand, you're looking for to take your entry to go long on your lower time frame chart, because then we're moving in the direction with the higher time frame. So I lay this out because anyone out there who wants to start and is passionate about becoming a day trader and is motivated and is really wanting to start their journey, their path, down this road, please, if you do not have enough experience, take heed to this video here. Go back and watch some of the other videos. And please do yourself a favor and subscribe to the channel. All right? Because I think that you'll find a lot of valuable information within the video content that I create. And if you don't believe me, please ask some of the community members on the Discord community. Invite yourself in. Click on the link down in the description portion of this video and do yourself a favor. Ask some of the community members. You know, there's a general chat, which is basically a question and answer type channel on the Discord, to where if you're interested in trading futures, because that's what we do, we don't trade options, we don't trade stocks or anything, you know, or Forex on this, in this community. It's futures, okay? It doesn't matter if you trade the NASDAQ, the Dow, you know, any of the currency related asset classes or instruments, or you know, anything, grains or whatever, commodities, whatever it is, guys, as long as it pertains to futures. I have a hard time saying that word sometimes, you know, I don't know, it doesn't come out right, but please forgive me. But anyways, I highly recommend you coming over to the channel, guys, and joining. All right, do yourself that favor, and I think you will love the community. You'll have a growing experience, and you will learn loads of information. But the strategy of how I trade is very simplistic. It may take a little time, but depending on your learning curve and how quick you learn, everybody's learning curve is different, okay? So outside of that, guys, I'm just here to help you along as far as providing information that I know firsthand, okay? So if you're not a current subscriber, please take the time to go ahead and sub by clicking on the sub button below. Always, please, make sure to turn your post notifications on. Maybe asking how can you do that? Click on the bell, okay? All right, next to the subscribe button. I think now once you click on the subscribe button, it drops down and gives you the option to click on the bell. So make sure to click on the bell so you never miss one of the uploads here on the channel. If you're interested in becoming an elite member, guys, it's $6.99 a month. You can join by clicking on the join button here on this video or any video. You know, it's a little link or button right next to the subscribe button that says join. If you're interested in doing so, okay, it's $6.99 a month, you know, not a day, not a week, not $699, $6.99. And what you get are the trade breakdowns. When I post the actual breakdowns of my trades, it's basically a learning experience, because it's as if you're sitting next to me and I walk you through and break down what I was thinking leading up to a trade. So as well as you get the video playlist of videos that I've hand selected that I feel are pertinent or value packed videos that aid anyone, especially beginner traders that are really starting off, okay? You know, of course, you also get the basic stuff, the emojis, the badges, the priority reply to comments. But look, how many of you guys spend more than $6.99 on coffee daily, okay? So just think about $6.99, what it could add up to, and you becoming a successful trader as well. So I'll leave that out there. Again, click on the join button if you're actually interested in joining. But that's all I have for you guys today. Hopefully you take heed of this, and this will be a learning experience, and you will flourish as a trader. If you are new to the channel or someone that's starting off wanting to learn how to start day trading for a living. Outside of that, guys, I appreciate you tuning in and watching today's video. I'll see you in the next one. I've already posted my first trade today over on the Discord. And there is a channel. I know I said I was going to end it, but there's a channel on the Discord community where we as traders share our trades on the daily, and we express and explain them as well for anyone out there that may have a question, okay? It's called the trading floor. You can come over on a daily basis during the New York session and engage in that channel as well, all right? I'm not saying you have to be a beginner level trader. You could be intermediate, professional, experienced level trader. Come over and join us. Take care, guys. I'll see you in the next one.